may have been closed here in the U.S. on Friday, but Tesla was out with some major news, and investors are excited this morning. The company announced that it delivered 184,800 cars in the first quarter of the year. The stock is up about 7% in pre-market trading following this news. And Wedbush analyst Dan Ives out with a note this morning, calling that number a paradigm changer for the company. And Dan joins us now to discuss. Dan, appreciate you hopping on to talk about this news. So walk us through your thinking now, not just what you saw in the first quarter, but how you're now thinking about Tesla's trajectory for the rest of this year and beyond.
Yeah, and I think it was a game changer in terms of what we saw in 1Q. Whisper numbers were as low as 160, 165K, given chip shortage, as well as what we see on the S and X. I mean, I think China's skyrocketing growth, and that's worth potentially $150 per share of the story. And I look at this as a green tidal wave with Tesla leading the charge. And I think we're going to start to see potentially 900,000 units, trajectory that out, even though it's been obviously a painful sell-off for Tesla and EV names. Now, I think this is just the start of a massive rally, 30 to 40%, $1,000 our price target for Tesla, bull case 1,300. And I think this is a really golden buying opportunity.
Hey, Dan, it's Julie here. How has Tesla avoided the chip problem that all the other automakers seem to be having? I mean, you need as many, if not more chips for a Tesla, I would imagine, as you do for a Ford F-150. So why isn't Tesla having the same production issues?
Yeah, and it's a great question, Julie. I mean, it's still about 10% headwind. So I think it just shows without the chip shortage, we're probably looking at a 200K number. And I think it just really speaks to, it's the pent-up demand. Right now we're seeing it, of course, China and Europe leading. We think China can be 40% of deliveries for Tesla by next year. But look at what happened last week. Biden kicking off the tidal wave, the green tidal wave in the U.S., 2% of automotive today. We think that goes to 10% in the next 4 to 5 years. And when you look at EVs, these are stocks that continue to re-rate. You see it even in a GM. GM is going to continue to get re-rated, not as an auto company, but a disruptive technology player.
Dan, you mentioned the Biden administration. How much is a new EV tax credit worth to Tesla? Are we talking, over the next 5 years here, it could be the type of profit driver that takes Tesla shares to, what, 2,000 a share? Who knows?
Yeah, Brian, I think that's the key, because if you look at it today, if me or you or anyone else goes in to buy a Tesla at $7,500 tax credit, you're not getting for a Tesla or a GM. They've already gone through that 200K ceiling. I believe as part of the infrastructure bill, the $2.3 trillion, you see those restored. So the tax credits come back to the Tesla and GM, and we're hearing out of our contacts in the Beltway, that $7,500 could potentially be $10,000 in terms of a credit. And that's going to be a massive catalyst, not just for Tesla, but for the EV ecosystem in the U.S. as part of this green tidal wave. I think we're just starting to see this all play out domestically.
Dan, is that tax credit, is that factored into your $1,300 price target on Tesla?
That's the difference between 1,000 being our base case, 1,300 being the bull. And I think it's something that, despite this emotional bull-bear story, I think lost maybe in the noise in terms of what this could mean in terms of that tax credit boost for Tesla and EVs. And that's why if there was a quarter they were going to stumble, it was 1Q. And that's why I think whispers continued to move down. You look at what we're seeing on Model 3 and Model Y. When that number came out Friday, it almost fell off the chair in terms of just how strong it was.
We also, Dan, just got those Xpeng numbers for the quarter too, and it looks like just over 13,000 is what Xpeng delivered, 13,340 units for that company. When is Tesla going to see some more real competition in this market? I mean, it's coming. We all know it's coming. At some point, it's going to be maybe more problematic for Tesla, maybe not. But when are you kind of expecting that, and what is that going to look like?
Yeah, and when you look on the Xpeng, similar to what we saw with NIO, as well as some other Chinese players, strong numbers coming out of the board in China. But right now, it's a $5 trillion market over the next decade. Big enough ocean for more than one boat. There's going to be many winners here. I mean, we have 130 to 140 players going after the EV market. And of course, they're going to they're going to have some erosion of market share of Tesla. But this is a rising tide lifts all boats in terms of EVs. That's what you're seeing in China. And I think that's what you're going to see in the U.S. I think GM, Fisker, Faraday and others as they really dive into the deep end of the EV pool.
Dan, kind of related to that point, what is the most common bear retort that you're getting these days on Tesla? Is it that idea that all this competition is coming into the market? A couple of years ago, it might have just been a balance sheet type question. Is it that competition question now as people look out 5 or 10 years?
Yeah, and I think many of the bears continue to underestimate the green tidal wave and everything that Tesla's doing. I think many of these bears are the same that were probably negative on Tom Brady coming out of the draft in '94. And it just speaks right now. The biggest bear argument is competition. Price cuts is how they're ultimately catalyzing demand. But that's not true because now you're starting to see price increases. And the pure numbers just speak to right now. We're in the second inning of this massive $5 trillion market. And I think the bears continue to sort of not see forest through the trees, in our opinion, as well as just what's happened, not just in Tesla, but the broader EV ecosystem that's being built here before our eyes.